Okay, here we are. Final month of the year, December 1st. CJ, what's happening on your end of the planet?
Tom, I'm looking at some movements in the market that I haven't seen in months, maybe even more than a couple of years here as we
Yeah.
head into December. So it's kind of getting a little bit exciting here. A lot of people calling for an end to this rally. We're ready for a correction. I think the data and the action is lining up differently right now.
Yeah.
Yeah.
Speaking of different, you've got a short sleeve shirt on in Cincinnati,
Hey, you
and
can.
I'm wearing, look at me. Here's something you don't see me do every day.
Yeah.
It's cold down
Yeah.
here.
You know what? They say let's scratch this up to TV magic, Tom. I think it's 17 degrees outside. I just decided yesterday that I was going to keep the house nice and warm. Normally it's down around a toasty 61. And at some
Yeah.
point last night, I woke up and told Alexa to turn the temperature up to 68. So yeah, I'm decided to go a little balmy look today, but it
Nice.
is cold outside.
See, I didn't, we went down into the low 40s last
Oh,
night.
no.
And I did not have the heat on. So nevertheless, I mean, the temperature in the house is in the high 60s, but that's cold.
Yeah.
And then here in my, in my office, I would say probably low 60s is what I'm feeling right now.
Uh,
So yeah,
yeah.
it's a complete turn of events here for both where I'm broadcasting from and from where you're broadcasting from. Because if someone would look at us, they'd say, "Oh, Tom must be in upstate New York, and CJ must be in Acapulco."
No, you know what this really is, Tom? This is me playing mind games with myself. I'm heading to South Dakota this weekend
Ooh,
with some friends, and it is brutally cold there. So I'm
oh
trying
yeah.
to make it feel warmer than it is right now before I go to that kind of cold.
Bring your snowshoes. All right, hey, let's.
Exactly.
You were mentioning a couple of points to me before we began, and
Mhm.
one of them was about risk on. So
Yes.
tell me what you're thinking.
So let's look at the market from what's happened over the last 3 weeks. Remember when Jerome Powell came out and said, hey, interest rates aren't going to go higher? He still said they could, but he said higher and longer was still the message. But then we got that CPI and PPI number that sent the market through the roof. Everybody came to the assumption, let's call it at this point, but I think it is a pretty good one that the Fed is done. Now we're hearing everybody talk about interest rates in 2024 coming down as much as 1 full percent. About 6 weeks ago, it was only a 0.5% in 2024. So the market is now in that optimistic, hopeful mode. That's good and that's bad. I mean, you and I are both sentiment guys. I
Yeah,
don't like to see when everybody's optimistic, but when you look at what happened, the S&P 500 and the cubes took off. They were already above their key trend lines. This was everybody piling into the stocks that they know. Tom, today you're seeing the IWM, the Russell 2000, move above its 200-day moving average. This is the first time since earlier this year that you've seen that happen. That means that investors are starting to broaden their risk appetite, and they're starting to think outside of just Nvidia and Apple and think
yeah,
about some of those companies that are possible value plays. That means that you've got a true risk on rally that is here to take us into the end of the year. And also a couple of other things. If you look at interest rates, I mean,
yeah.
we flashed through 4.5%. We're on our way to 4.25 on the 10-year. This is the market just breathing a sigh of relief, and there's a lot of money coming into the market from the sidelines now.
Yeah, I mean, but don't you think though that I mean the one thing that could derail this move is the holiday shopping season, which I'm still shocked. I'm absolutely shocked that we had the year over year sales increase of 7.5% when I hear a lot of people complaining about the cost of living still. Yet where's the money coming from?
Uh, you know what? I was going to call Fugazi on that number myself, Tom. So I'm glad that we're both thinking that way. I think this was people trying to get in there and just hit on those specials. They're saying that there's a lot of holdback on people. They're waiting for deeper discounts. Here's my thing, though, and I'm worried about retail sales just like you are. But go back to that sentiment aspect that you and I just talked about for a second there. The market climbs a wall of worry, is
Yeah.
the saying. We've been hearing for the last 6 weeks that these retail sales numbers were going to be bad because the consumer is tightening their belt. What if they come in just at average? this market's not going to hold back based on that. So I think you
No,
look
no,
at
but
it.
you know what?
Yeah.
I'm also interested in the fact that the consumer's somehow pulling a greenback rabbit out of their hat. 7.5% increase year over year to new record high online sales. Either the money's coming from, either somebody got it wrong on the stimulus checks and that there's still some stimulus money in bank accounts that's being spent, or credit is going. I mean, credit card people are spending money today thinking they're going to have it tomorrow. So, that's the part that I'm not so sure of, but it's okay because I don't trade by what I think and what I feel anyway.
Right.
I just look at some of the overall, that 40,000 foot view and say, where's it all coming from?
I think I think you nailed it. It's that old Flintstones when Wilma and Betty would go out and they would yell "charge it" when they were going out
Yeah,
to go shopping on the Flintstones.
yeah,
Everybody's got this thing out and they are just charging it and they'll pay later.
yeah. That seems to be the case. I
Yeah.
mean, the other thing that's got me a little bit concerned, and
Mhm.
I'm not so sure which way that it tilts, is that used car prices and new car prices
Ooh.
are getting slammed.
Yep.
We've seen a 20% flip in some car prices. The used car markets have just completely turned upside down.
Yep.
Um, there are dealers right now trying to figure out, the Lexus December to remember is, it's not happening.
Right.
Even truck sales, light duty and heavy duty truck sales are off because I think, people are saying, all right, I can wait on this another year or two. There's refreshes that people are waiting for, but I also believe that there's just a glutton of cars, both gas guzzlers and, I mean, look at the electric market right now.
Mm.
Ford is got, they've got this problem with the F-150 Lightning. There's
Yep.
just the people aren't buying them. Maybe it's because the Cybertruck is, there's still hopes on the Cybertruck, or maybe it's something more.
Yeah, I think you've got it with the something more. I don't think too many people are worried. The Cybertruck is going to be a 1%er type of thing for a while, right? But
Yeah,
that Ford F-150 Lightning not moving, that's where you get down towards the middle of the curve here, maybe up towards a little bit above the middle of the curve. But
right.
I think that is the sign where you're seeing people tightening up. They're just not. I mean, Tom, go out and buy a Ford F-150 Lightning, and what are you going to pay in terms of an interest rate on a good one? I just had a friend that bought a Mercedes last week. He's paying 8.25 with an 820
Wow.
credit score.
No,
Eight and a quarter.
I'm an old guy, and I have old guy mentality, which is if I don't have the money for it, I'm not buying it. And
That's
so
right.
I'm an all cash and carry kind of guy, and I should be this as old as I am now.
Yeah.
But speaking of something that has value, let's talk
Mhm.
about something that has value for a moment. You were also talking about the fact that gold
Yeah.
has. I mean, gold's breaking back up to those almost all time highs again.
Yes, sir.
But it's doing something different than it's done in the past. It's actually turned the last couple of weeks has been correlating with the markets more. Um,
Yeah.
what's going on here?
Well,
Why
let's
all of a
go
sudden
back.
the turnabout?
Let's go back to that thing I said about the IWM. I haven't seen this in a long time, is the quote there. When you look at gold, and Tom, you and I talked about gold. You were bull on gold, what, 4 or 5 months ago, loading up on gold and telling
Mhm.
people, hey, when we hit these lows, it's time to dip in and buy. If you look at gold, you nailed it. We were, and now we are at all-time highs. A couple days ago, we were 3% away. A
Yeah.
couple days ago, the S&P 500 was 3% away from all-time highs.
So
Yet the
let me share
bond,
the chart that I have on the screen right
yeah,
now. And what you're seeing here is the red and green colored candles. That is the S&P 500. What I
mhm,
have here in black and white is an overlay of GLD. And so you can see back here in September, it was pretty much gold was running with the markets. Then it broke in October as the markets were moving up. Gold continued to move higher as the markets turned in October and made lower lows. Gold ran up and made higher highs, and GLD was trading in the mid 180s. Then they both did an about face. The markets went higher, gold got a little soft. But that all
mhm.
changed after maybe about the first, second week of November. Gold just ran off to make new highs, higher highs. And of course, so has the S&P. But yeah, so for the last 2 to 3 weeks, these two guys have been running together.
Yep. And if you even overlaid the bonds, a TLT, that long 20-year bond, over that, you're going to see the bonds have been doing the same thing here.
Yeah, let's do that
This
right now. So here's
this
TLT.
yeah,
With this is the S&P
look
and
at that.
TLT. Look at the correlation on these guys.
Uh-huh.
I mean,
So
down here, this is when TLT was trading down in the low 80s, and that was when interest rates were at their highest for several years. Since then, TLT's moved up at least 12% off of its bottom. Look what the market did now. The market was a little late to the party, but TLT made the turn first. The markets moved second, and we went from 410 to 455. I mean that's almost a 10% run there since in a little more than a month.
yeah. Think about what happened in that month of October, too. We've seen all kinds of geopolitical concerns around what's going on in the Middle East. And
Yeah.
that's why you had gold going up and the S&P 500 going down. That is an old-fashioned risk-off trade. Now, with all three of these assets moving higher, bonds, gold, and equities, and you've got the IWM breaking above that 200-day, you have an old-fashioned risk reallocation.
Yeah.
Old portfolio managers like I used to be, they're taking money off of the cash off of the sidelines rather, and they are moving it into traditional portfolio allocations, which includes that good old-fashioned 60-40 equity bond allocation with
Mhm.
10% of metals. That's what you're seeing right now. Everybody's jumping back in the pool.
It certainly seems that way.
Yep.
So the other thing that we want to talk about, so we got a couple things on, so we've talked about where the markets have been. Let's talk about where they're going. And the
Mhm.
first thing I want to show everybody is I want to move to the money calendar for December. So that's what we're looking at right here. There's a lot of color on this screen. So it's not all green. And in fact, when you roll into the first full week of December next week, things are a little bit, we got a little bit of softness here. 58 and 42, 61 and 39. That's the bullish to bearish signals. We get a little green here, but we really don't get green until we get into the week prior to Christmas. The week prior to Christmas, we go 91, 91, 92, 96, and 98. That means that's the number of bullish signals out of all the signals that we're looking at. So, on the 18th, I see 117 potential trading signals, and this is out of thousands of stocks. Now, that 117 means that we've gone back and we've done some research, and we've determined that with at least 10 years of research, there are 106 stocks that are starting their bullish patterns on the 18th. That means 91% of that 117 total stocks are all slated to go up. It's funny that it waits until then, and I just wonder if you said it earlier. You said there's a lot of people that are waiting around for deeper discounts, and those consumers may be waiting until the week prior, because this is the week where, okay, if Christmas falls on a Monday, you got yourself at least till the 22nd. Yeah, you know what, 23rd, even 24th, there'll be some stuff that shows up at your door, but you're going to be buying. You're going to be making your final purchase decisions this particular week.
Yep.
And if you're out here, you got 3-day FedEx. Over here, you're going to be looking at getting this, wanting to get this overnight. And then, 23rd and 24th, hopefully you live in a metropolitan area if you wait until that long, because you're going to need something dropped off within hours of ordering it. But it's very interesting to see. We have a full shopping week before the holiday, the Christmas holiday hits us. I do think that retail is kind of a double-edged sword, CJ. That what I mean by that is that if you look, we have the longest periods that we see in terms of business days between Thanksgiving and Christmas, right? Typically, it's a little bit less than this. That's good for retailers, but the problem with retailers is that maybe their revenue goes up, but their earnings more than likely are projected to go down, because they're all fighting with each other to get that dollar.
Yeah, I think you're exactly right there. You know what? When you look at the retail sector itself, too, Tom, I'm sure you've noticed this. It's a haves and have-nots
Yeah.
sector. You've got companies like Target and Walmart that are kind of coming to the party a little bit. But if you look at some of those companies that, yeah, we joked about it a couple weeks ago when I made the joke I worked at American Eagle as one of those models that stood outside.
Hmm.
American Eagle got battered after their earnings announcement, went down to $16 from 20. So it
Yeah.
lost 25%. Guess what? It's coming right back up to $20 again. It's one of the halves in this group. If you're in
Hmm.
one of those companies where it's in inelastic demand is what I typically call it. American Eagle, Abercrombie and Fitch. That's the nice side of that double-edged sword or the halves. Take a look at Best Buy, though. I mean, Best Buy, remember everybody used to go to the Best Buy to buy everything. They're kind of digging out of the basement right now. And I
Yeah.
think they're going to end up being one of the have nots here after the holiday season because who's going to spend, $2,000 on a nice TV when they're trying to tighten their belt? So this is retail's. I'm glad you brought that up. Retail's probably the most interesting sector out there right now.
And when I look at something like one of the stocks that pops up that has been on my radar this week, and it's not one I typically trade.
Uh huh.
I'm kind of doing a tease here for something later in the session, but here comes GameStop with another earnings announcement popping up. And have you seen what the stock's been doing lately? It started popping
No.
up a bit.
Oh boy.
What's interesting is that it's not the pop, it's not the price that's got me, wondering where the meme crowd is. It's the implied volatility on the options. And so if I bring up an overlay, and I'm actually going to put the 7 to 30-day options IV up, take a look at that.
Ooh.
Look at that whoosh. I mean, and we don't have earnings until the 6th of December, and it's already starting. It's starting the week prior. And so that's just from 2 days of movement off this double bottom down here at 12. All of a sudden 12 becomes 16. You get 4 points and everybody goes crazy. It's kind of like, with all that technology that, with millennials, I think about this, and you know what gets me is that millennials come in with all this technology. And yet, if you throw a water bottle up in the air and it lands flat down, they all go crazy.
Nah. You can make a YouTube video with that, right?
Exactly. And that's kind of what's going on here. All that's happened is the water bottle got thrown upside down with GME and it's
Yep.
up 2 days in a row. And all of a sudden, everybody's going crazy again. I smell losses for the retail
You know
trader.
what? I
You know,
I I do as well, man. I noticed. I'm glad you brought that chart up because the December 20s went nuts in terms of call volume yesterday. So even it went so crazy with call volume that Bloomberg did a report on it. So if
yeah.
Bloomberg is reporting about call volume on GameStop here, you know that everybody is making a big speculative bet. Remember, Call of Duty came out, for ahead of the holidays. So maybe
Yeah,
they're
but
going to have something good. I think this is the first time Call of Duty's had a new release right ahead of the holidays in a long time.
Yeah, but GameStop doesn't have the exclusive rights to sell it, to be
Correct.
the only people to sell it. And I
Correct.
don't know anybody to buy stuff from GameStop anymore. Everyone
No.
goes to Amazon. Everyone goes online to get these things, and they have a multitude of places to buy it from.
Yep.
So
You can still
anyway,
rent it at the Blockbuster, right?
yeah, that's right. The one blockbuster that's left in the entire world, which
Yeah.
is in Bend, Oregon. Uh,
Yeah.
but my goodness, this is, and I'm going to get to these in just a few minutes. But I thought what we would do is take the information that we have right now, and let's look at some projections. So, where do you see the markets 1 month from today as we enter the end of December? Where do you got the markets at?
All right. So I think the S&P right now, the S&P 500, and we'll look at the spider shares for this number. So we'll keep the number a little bit lower in terms of scale. If we take out that 460, Tom, and I think we could take that out this week. Remember, we've got that PCE number, all of these things that are hitting that are going to make people either feel real good or bad. We take that 460 out. I think you hit a 470, maybe even a 475. So that's a 4750 on the index itself. That's another 5% from here by the end of December, and that's
All
a
right,
nice
5% on the
rally.
SPY, and you know what? For those of you that are option traders who are watching this podcast, I want you to pay attention to this red line here. Down here, this is when the options are relatively cheap. Up here is where they're expensive. So I don't want to be buying options when this red line is near the top of the chart. I want to be an option buyer when it's down here near the bottom, which is where we pretty much are right now. We're on the area where options are better priced for the option buyer. And so if you believe the S&P is going to make a run to the upside here in the next month, maybe buying call options or buying call spreads that are slightly out of the money make sense. They make more sense now than they did when the market was bottoming, because, you look down here and go, oh, I wish I would have bought calls down here. Well, yeah, you know what? You did see that market rise, but a lot of the money that was made on the upside was given back in terms of time value as these options dropped. Think about this, and I want to explain this to everyone. Up here, these options were twice as expensive for those near money options as they are recently, because we've seen a 19 become an 8 and 19 become a 9, and so when you take away 9 from 19, you're taking away almost half of that time premium. So yeah, you'll get a big run up if you're right, but you're going to give a lot of it back. I would rather be a buyer, an option premium buyer, when we're seeing this stuff on the cheap side. All right, CJ, what else you got for us?
Hey, you know what? I'm just going to point out the people who are watching the video, who are actually seeing this, not just listening, will probably go, hey, Tom, that implied volatility on the S&P 500, and this obviously is going to be the case, looks a lot like the VIX. The VIX is trading at 1250 right now, Tom. Yeah. And a lot of people saying, oh, this is, it's a sign that everybody's whistling past the graveyard or something. Question for you. What's the natural resting place for the VIX? What number do you think it is?
I don't have one. I mean, it's usually, I used to look at 10 and 20, but I also, I'm one of those guys that believes when the VIX is low, it's time to go. But we don't, what's going on in the month of December? We're getting rid of those last bits of earnings. Those are going to be coming out here. They're dribbling out.
Right.
You've got, what is market risk right now? A war that we're already in a couple of them right now.
Right.
There's going to have to be, is China going to have to invade Taiwan? There's got to be something else that we don't know about that's going to move the markets, because everything we do know about has already been baked in.
Yeah. It sounds like you're saying, dare I say, the market is going to be boring in December?
I believe so. And boring is good, folks.
I was about to say,
boring is good. That's where you make money. You don't make money when markets are exciting. You make it when it's boring. Think about, when you go to Vegas, the more exciting it is when you're in the casino, the more money you're probably losing. Look at the casino themselves. Look at the people on the other side of the table. Do they look excited? No, they're tired. They're working, but they're making money. That's the other side of the casino. And to me, boring, when the markets are boring, it's like you're an employee of the casino.
Yeah.
And you're just making a little bit of money here and there. And, so I think the next few weeks, and time will tell, but I think the next few weeks are going to be boring and bullishly boring.
I'm going to share this. I had my mentor 30 or maybe 28 years ago, Andy, when I worked at Prudential, told me never short a boring market. So we can tie that up with that saying, never short a boring market.
All right. So I talked about, so we discussed the counter for December. We discussed the correlation rally. Let's talk about where the crowd is. And I started with GME, and that was part of where the crowd is. And I thought, what report can I run to see where the crowd is right now, where the people that are just dying to give their money back, where's that at? And so I ran a report, and, here's the boring side. The stuff is all cheap. NVIDIA is boring. AMD is boring. Compaq is boring. Hewlett Packard. Target is actually boring right now. Autodesk is boring. Burlington Coat Factory. Wow. Just, look at what I'm wearing today. That's a buy right there. But look at this side. Look at the left side. This is where the excitement is right now. You've got Dollar Tree, you got Dollar General, Chewy, Kroger, Dell. What do these folks all have in common? Let's go find out, shall we? So I'm going to start with let's bring it up here. FL. There you go. Foot Locker. All right, what's going on with Foot Locker? Well, Foot Locker actually just announced their earnings. So, but in the time that I set this up and the time that we started podcasting, that markets already open, Foot Locker's released their earnings. They actually beat expectations, which again, folks, even a clock can be wrong, it can be right. A broken clock can be right twice a day. And that seems to be the issue when it comes to trading these kind of moves. All right. Look at Dollar Tree. Same thing. Dollar Tree, earnings announced, and then drop. Now, let's get into Dollar General. Why is Dollar General higher? Well, because they don't release their earnings for another week. They're going to release on the 7th of December. And they're up really in sympathy of the competitor. Dollar General is up because Dollar Tree announced positive earnings. Yep. We'll see where Dollar General goes next week. But you're seeing a little bit of a rise in DG. How about New Path? Okay, so New Path has earnings in a day. Look how high. Look what's going on with it. And I'm looking at the red lines. I'm not looking at what the stock price is doing. I'm looking at what these option traders are willing to pay for these options. All right, where the meme traders are. Chewy. Look at Chewy. Look at that move. That option move is on fire because guess where Chewy is? Down here near multi-year lows. If I remember correctly, Chewy used to be a stock that was trading near $100 a share at one time.
Yeah.
During the stay-at-home era. And this thing's given back 85%. And I mean, look at just the chart here in the last 6 months. July, $40 a share. Then we jump forward to September and we're down to 18. And we're clipping 1680 here. Get a little bit of a move back and forth, but all eyes are on the report that comes out next week, which is the 6th of December. All right. That's where a lot of the meme traders are. How about Kroger? Well, Kroger's kind of gone up. I mean, Kroger's one of those, it's an interesting company, barely moves, as a grocery chain, but it's been moving around a lot lately here. What I mean by moving around is it 50 on the high side and about 42 on the low side. That's a big movement for a stock that was really considered just this boring value stock. Earnings are due out now.
Yep, tomorrow.
And take a look. I mean, you've got this big move that happened 3 months ago, and then all the call and put buyers came in and they got their heads handed to them, and it looks like that's literally going to be the case again because it just doesn't. We're not going to see Kroger gap to $100 a share or gap down to 25, but yet the options are kind of suggesting that people are just buying these expensive options. They're seeing that Kroger truck running around in states where the actual stores are not. Florida's one of them. We don't have Krogers in Florida, but we got Kroger vans all over the place.
Yeah, that Albertsons deal too. That's out there for Kroger still.
How about Dell? Dell Computer, which used to be one of the most popular stocks traded 20 years ago, and went to obscurity, and then it came back, and here it is, and it's doing the same thing. Last time we had earnings coming up a month prior, we saw that implied volatility go from the 20s to the 50s, doubled, and then it crashed just as fast. And here we go again. 30 became high 50s again, as we were entering earnings for Dell. What I'm showing everybody here is where you don't want to put your chips in. You don't want to put all your buying chips into this group because the options are extremely expensive. So this is, to me, expensive IV is where you want to sell premium. And over here, cheap IV, well, that's where you want to be buying premium if you expect moves in those underlying stocks.
Yeah. Great information. Yeah. That's awesome.
So there we go. That's I mean, and that kind of rounds out what we were talking about for the week. So we got a pretty good December. I see the pointer over there.
that's the stone cold killer, Tom.
Going out. And as we head out, the dog knows the podcast is over. He's already ready to go back down the hall and get outside. Enjoy some of that 17-degree weather.
Exactly. Well, she's
So,
going to South Dakota too. That's the whole reason we're going to South Dakota, so she could take a walk in the field. So, yeah, she
yeah.
doesn't mind that 17-degree weather for sure.
Well, awesome. Well, Chris, good having you on the program again. Folks, we'll be back here again next week for our first full week of December. And you know what's going to happen? A lot of the stuff that I showed you that was on the expensive side,
Yep.
we're going to get an idea of exactly what those do and see where those go. But my expectation, just like you, CJ, I think we're going to slide out of this year with a lot less news than a lot more. And sometime, by the end of the month, probabilities are suggesting that the overall markets will be higher.
Yes, they are.
Of course,
We'll look
time will
forward to
tell.
it. Exciting money calendar too. That I can't wait to see that potential for that Santa
Yeah.
Claus rally start to play out.
All right. Well, have a great rest of your day, CJ.
You as well.
Folks at home, enjoyed it. We'll see you again next week. Till then, be safe. Bye, everyone.